Let me start by asking you about the rate cutting. You've been cutting interest rates until as recently as May. Is that over? Have you turned a corner? Are you done cutting?
No, I think if you look at the behavior of the Ghanaian economy, we have seen a significant turnaround in the macroeconomic fundamentals, a very deep fiscal consolidation, fairly robust balance of payments developments. And then on the basis of that, the Monetary Policy Committee had reduced the policy rate in line with the disinflation process that we had seen over the last 20 months or so. Now, if you look at all of that improvement reflected somewhat in the behavior of the Cedi throughout last year, the currency was relatively stable. And in the first 5 months of this year, it actually appreciated against the US dollar until May, when the emerging market problems started, and then we started seeing additional currency depreciation, losing almost 7% by September. So this is the context in which the Monetary Policy Committee sort of held the monetary policy rate at 17%.
I have a chart, actually, of the federal funds target rate. You mentioned the U.S. dollar, which is why I think of what the Fed is doing right now. The chart I have just shows the Fed raising, and that's hurting emerging markets from an equities perspective, but also clearly from a currency perspective and from a debt perspective, it's been difficult. What do you think about what the Federal Reserve is doing? Do you think they're taking enough notice of how it's affecting markets like Ghana?
I'm not sure if they are. I think that we hear there will be 2 more tightening of the policy rate there before the end of the year, and we are bracing ourselves for that. It's in anticipation of that the policy rate was held, actually, in the last 2 meetings of the Bank of Ghana's committee.
Does it matter if your policy cycle is out of step with the Fed then? I mean, it clearly hurts for many emerging markets if the Fed is hiking so aggressively that the dollar strengthens so much. Therefore, is it important for you to not be too out of step with the Fed cycle?
I think the challenge comes in terms of the gains that we have made over the last 2 years. And then you are seeing all of these gains being wiped out in a relatively short time. So it obviously poses, fairly significant challenges for us in terms of the cycle.
You have been, you've gotten inflation under control. You've got it down into your target range, but we're now hearing that it could turn up in the fourth quarter again. Does that concern you?
Inflation is fairly well anchored. We think expectations are fairly well anchored. It's been hovering around 9.6, 9.9% for the past 5 months. Now, 2 things have happened over the past 3 months. This is the rise in crude oil prices, as well as the currency depreciation. And we have an automatic pricing mechanism for petroleum in the country. So you'll see that petroleum prices have gone up, transportation prices are also picking up. So we think that there is a threat to the outlook in terms of where the inflation would be. But we are not looking at, a major departure from our targets.
We've seen a lot of offshore investor participation in Ghanaian local currency bond issuance of late. Have you seen that change? Has there been less appetite for that recently?
The appetite, I think, it's still there. Once in a while, we see the contagion effects in terms of sentiments and a few outflows, but that tends to be short-lived. This has not persisted over a long period of time.
Does that weigh on the currency, though?
That obviously has an impact on the currency when there is that sudden interest in exiting the market. But we have managed that well so far.
I mean, you saw that when the Century bonds were on offer. What's your take on Century bonds and how will that go in the future?
I think it's a good idea to look at the longer term. This is what the finance minister was looking at, the longer term financial needs of Ghana. However, we are also focused on the importance of debt sustainability. So we are trying to manage the contraction of debt to be consistent with our fiscal framework.
We talked a bit about the Fed. Does it seem to you as if the Ghanaian economy is at the whim of global forces at the moment? We talk a lot about negative things such as the trade war and the negative impact that might have on various emerging markets. Are you at the whim of those forces, or is the Ghanaian future in domestic hands?
There are areas of vulnerability. If you look at the balance of payments for Ghana, our economy is well diversified. We have gold, we have cocoa, and we have oil, all of which are doing very well in the current global situation. We are seeing very robust increases in our gold exports. We have seen our oil exports also jumping up by nearly $1 billion. So yes, in terms of the balance of payments, the impact has been very strong. I'm not sure if the trade wars have yet impacted on export volumes, for example. But on the other hand, we have the issue of the interest rates and the vulnerability from the non-resident holders of our bonds. And that's where the current weaknesses appear.